Subscribe, like, and share Cosmo Academia. Namaste and welcome. India's quest for energy security has taken a fascinating turn in recent months. The most striking development has been the resurgence of West Asian suppliers as key players in the Indian market. Iraq and the United Arab Emirates, in particular, have stepped up their exports to India, capitalizing on favorable pricing and evolving geopolitical alignments.
Subscribe, like, and share Cosmo Academia. To truly grasp the significance of these recent developments, we must delve into the historical context of India's energy landscape. As the world's third-largest consumer of oil, India relies heavily on imports to meet its ever-growing energy demands. For decades, India has sought to strike a delicate balance between securing reliable energy supplies and managing costs. The Ukraine war, which erupted in early 2022, sent shockwaves through global energy markets, prompting India to reassess its reliance on Russian crude. While India initially capitalized on discounted Russian oil, the landscape began to shift as Russia prioritized its domestic needs and Western sanctions tightened their grip. This confluence of factors created an opportunity for West Asian producers, particularly Iraq and the UAE, to increase their market share in India. These nations, eager to strengthen their economic and strategic ties with India, offered competitive pricing and reliable supply chains. The surge in Russian domestic demand for crude oil can be attributed to several factors, including a rebounding economy and the Kremlin's efforts to bolster its domestic refining capacity. As Russia focuses on meeting its internal energy requirements, its ability to export crude oil to traditional partners like India has diminished. This has created a supply gap that West Asian producers have been quick to fill, further solidifying their position in the Indian market. By cultivating relationships with a diverse range of producers, India aims to ensure a steady and reliable flow of crude oil to fuel its economic engine.
Subscribe, like, and share Cosmo Academia. The numbers tell a compelling story. In December 2024, Iraq emerged as India's leading crude oil supplier, accounting for a substantial portion of the nation's imports. This marked a significant increase from previous years and underscored Iraq's growing influence in the Indian energy market. The UAE, too, has witnessed a surge in its crude oil exports to India. As a major oil-producing nation with a long history of trade relations with India, the UAE has capitalized on the current market dynamics to strengthen its position as a reliable energy partner. Several factors have contributed to the rise of West Asian suppliers in the Indian market. First and foremost is the issue of pricing. Both Iraq and the UAE have offered competitive prices for their crude oil, making it an attractive option for Indian refiners seeking to manage costs in a volatile global market. Beyond pricing, geopolitical considerations have also played a role. India has been actively seeking to deepen its ties with key West Asian nations, recognizing the strategic importance of the region in ensuring energy security and fostering economic growth. The UAE, in particular, has emerged as a close partner for India in recent years. The two nations have strengthened their economic and strategic ties through a series of high-level visits, joint military exercises, and agreements on trade and investment. This burgeoning partnership extends to the energy sector, where India views the UAE as a reliable and stable source of crude oil. The UAE, for its part, sees India as a crucial market for its energy exports and a key partner in its own economic diversification efforts. Saudi Arabia, while not yet reaching the same level of market share as Iraq and the UAE, has also maintained its position as a significant crude oil supplier to India. The increased reliance on West Asian suppliers has had a noticeable impact on the Indian refining industry.
Subscribe, like, and share Cosmo Academia. The price of crude oil is, of course, the lifeblood of the global energy market, and India's recent shift in import sources has been heavily influenced by price dynamics. Russian crude oil, once considered a bargain due to Western sanctions, has become less appealing as Russia's domestic demand has surged, pushing prices upward. In contrast, both Iraqi and Saudi crude oil have been offered at more competitive prices, making them attractive alternatives for Indian refiners seeking to optimize their input costs. This price differential has been a key driver of India's decision to increase its imports from these West Asian suppliers. The pricing of crude oil is a complex equation influenced by a multitude of factors, including global supply and demand, geopolitical events, and speculation in the futures market. The ongoing war in Ukraine, for instance, has injected a significant degree of volatility into the market, making it challenging to predict price trends with certainty. For Indian refiners, navigating these price fluctuations is a constant balancing act. They must carefully analyze market conditions, weigh the risks and rewards of different crude oil sources, and make strategic decisions to secure the most favorable pricing for their operations. The relative affordability of Iraqi and Saudi crude oil has provided some relief to Indian refiners facing pressure from rising input costs. However, the situation remains fluid, and refiners must remain agile and adaptable to respond to future price swings. One factor that could impact future price dynamics is the potential for a resolution to the conflict in Ukraine. Should a peace agreement be reached, it could lead to an easing of Western sanctions on Russia, potentially increasing the supply of Russian crude oil to the global market and putting downward pressure on prices. Conversely, any escalation of geopolitical tensions in the Middle East, where both Iraq and Saudi Arabia are located, could disrupt oil production and exports, leading to price spikes. Indian refiners are acutely aware of these risks and factor them into their strategic planning.
Subscribe, like, and share Cosmo Academia. Gazing into the crystal ball of geopolitics and energy markets is always a risky endeavor, but certain trends suggest potential future trajectories for India's oil imports. In the short term, it seems likely that India will continue to rely on its diversified approach, sourcing crude oil from a range of suppliers, including West Asian nations, the United States, and potentially even a resurgence from Russia. The extent to which Russia can rebound as a major oil exporter to India depends largely on its domestic demand and its ability to navigate Western sanctions. Should Russia's domestic oil consumption stabilize or decline, it could free up more barrels for export, potentially leading to a more competitive pricing strategy to entice buyers like India. However, the long-term picture is less clear. India's energy demand is projected to continue growing in the coming decades, driven by population growth, urbanization, and economic expansion. Meeting this insatiable thirst for energy will require a multi-pronged approach, including investments in domestic production, renewable energy sources, and strategic partnerships with key oil-producing nations. West Asian countries, with their vast oil reserves and established trade relations with India, are well positioned to remain crucial players in the Indian market. However, India is also likely to explore opportunities to diversify its import sources further, potentially looking to Africa, Latin America, and other regions with untapped oil reserves. The global transition towards cleaner energy sources will also play a role in shaping India's future oil imports. As the world moves away from fossil fuels and embraces renewable energy, the demand for crude oil could eventually plateau and decline, reducing India's reliance on imports. However, this transition is likely to be gradual, and oil is expected to remain a significant part of the global energy mix for the foreseeable future. India, with its growing energy needs, will need to strike a delicate balance between securing its energy future and contributing to global efforts to combat climate change.
Subscribe, like, and share Cosmo Academia. India's journey to secure its energy future is a testament to its pragmatic and adaptive approach. By diversifying its oil import sources, India has reduced its vulnerability to disruptions in any single supplier country, a lesson learned from past experiences and recent geopolitical turmoil. Competitive pricing, geopolitical considerations, and established trade relations have all contributed to this shift, underscoring the multifaceted nature of energy security in the 21st century. As India's energy demands continue to grow, its strategic partnerships with key oil-producing nations will become even more critical. Subscribe, like, and share Cosmo Academia. So, as we've seen, India's energy landscape is in a fascinating period of transition. The nation's ability to adapt to changing circumstances, diversify its import portfolio, and forge strategic partnerships will be crucial in navigating the uncertainties that lie ahead. Subscribe, like, and share Cosmo Academia.